Good morning, welcome to the market view for Thursday the 29th of May 2014. Starting off with the 30-minute chart yesterday for the second consecutive day actually. This is what it used to be like trading the pound, where we had a signal and the market tended to trade in the one direction. So fingers crossed we are seeing a renaissance, hopefully, of the markets getting back to life. In particular, that there was no major economic news items out yesterday as well. So that's 2 days now of how it actually used to be trading the pound from sort of 2008 up until around this time last year, when it started to go slightly quiet. So fingers crossed, and I'm not preempting anything, the markets are starting to liven up a bit and wake up again and be like they used to be. So we had a sell signal at 7:30 yesterday, and then the market filling this. The market finding support around the scalp area, plus the R1. We had a couple of green bars in there as well, and then using the extension tools, which you've seen many times before, 50% above to try and lock in the profits for the longer term. You can see there the below the entry price, so safe to say that you could move the stop to break even. We then get another green bar here, and then one here. This is also missed. It's missed by a pip. And then we've got this one here, which is more or less the same price as is this one here. So there's 3 attempts there for the market to try and take out the stop, which it fails to do so. But notice what's really important here. There are 2 factors. This red line that's on the chart. Let me just go to the daily chart. You will see that it is a fib that I drew on during yesterday afternoon, which comes from this low to this high. I just kept rolling back until I kept finding the fibs. This one was taken out that we drew in yesterday. The support was also taken out at 167.30. And then I drew in this other one, which actually corresponded really with the 167 level, 166.96. So I drew this in yesterday just to see how the market would trade down to it. And of course it traded down to the 167 level. And that's where the market found support. It came back twice, so if you wanted to maximize what was available in the trade, you could have used the psychological level and its failure to actually close through. So down to the 167 level is 83 pips on this trade yesterday, just by letting the market tell you what to do. It didn't get any better than this. That became support for 2 reasons: the 76% retracement from the daily, and also the psychological level of 167. Holding prices there as well. So let's have a look at the daily chart once more, just to get an idea of where we are. We can remove this 76%. We can remove this low that eventually got broken yesterday. And 167 is the psychological level, with 166.96 as the next support area. And we've then got, it'll be down to this low to this high for the next sort of major support area. We can take the 62 out, and that's the next downside target. On the upside, we've got from this high to this low as the major areas. We've got 167.50 in between, and then 168 as well. So that's sort of the areas of resistance that you can see. You've got the psychological ones in between as well, plus the Fibonacci ones thrown in as well for good measure. In the news today, we've got nothing for the UK. The French and Germans are on hold today. We've got US at 1:30, and that's about it really. We've got prelim pending homes and unemployment claims. That's the weekly one. Doesn't affect the markets too much. The preliminary GDP figures are out at 1:30. They could have an impact on the market, so just be careful of that one. Pending home sales out as well, there to show a drop to 1.1%, so may have an impact on the Dow as well on this one. So that's it this morning. Short, brief, to the point. How it should be, really. If the market will just continue to offer the trades like it has done in the last couple of days, that would be just fine and dandy for all of us. All things being equal, I will see you in tomorrow's market view. Have a good day. As ever, thank you for your support and also for watching.